That's what the SPY predicts. What about IG markets? Let's get to Chris Weston, who joins us from the Melbourne camera. Chris Weston, good morning to you. 1.5%, that would be underperforming the global indices. Can we do better than that?
Well, we've got 1.5% as well. I think it's interesting to remember that, or important to remember that the SPY or the S&P futures were up about 0.5% when we went home. So I think some of the gains that we saw last night were certainly priced in. I think you're probably going to have to see a good print today on the unemployment lottery that we've got at 11:30. The range is massive at the moment. I mean, you've got Westpac calling for 17,000 jobs to be created. I'm not sure where they're going to be coming from, but that's what they're calling for. And AMP on the other side of the coin looking for a loss of 20,000 jobs. So a good number again. It could be good for some of the retailers. It could be so good for some of the banks. But then again, it does then take away from the case for a rate cut at the next meeting, which could work counterintuitively against the market. We're going to have to look at what's happening in China. I've seen India this morning have announced a big infrastructure project as well. I'm not sure how that will feed into the sort of materials play. But yeah, we're looking for a good gain on open today. It's going to be a good bounce, and 42.12, 1.5%. We should certainly be looking at that quite clearly. And also Janet Yellen coming out at 10 o'clock. I mean, she's the Fed chairwoman. She's very much in league with Bernanke in the way that she thinks. So people will be looking at that very closely in terms of how the Fed will be speaking, or Bernanke will be speaking tonight. So a more dovish picture than what we're used to from Yellen. Could see some buying in the market because it feeds into that QE3 argument. So no, I don't see it myself. I think 1.5%. We'll take that every day of the week at the moment.
Chris, we've been asking lots of our guests this morning about Ben Bernanke speaking tonight. When you see such a powerful rally on hopes of stimulus and know that the next day that Ben Bernanke has to drop that hint kind of or else, how do you actually trade something like that? I mean, really what's in play for us in the next 24 hours?
Well, I think you've also got the Bank of England's, asset purchase programme tonight. I mean, there's a possibility out of the economists. I think something like 30 or 40 economists, 5 are calling for an extra stimulus package there, an extra 50 billion to be added to their gilt purchase programme as well. So I think that could be a really interesting play. I think being short sterling Aussie into that's probably a good way to play that in case they do come out and do an out consensus asset purchase programme there. You've got the Spanish bond auction tonight. They're auctioning of 2, 4 and 10-year bonds, and if we look at the 10-year, I think that's about 2 billion. If that goes away terribly, like we saw with the Italian one last week, again, this risk rally may fade. But Ben Bernanke, everyone's looking at that tonight and hoping that he's going to come along and agree with some of the comments we saw last night. We saw Williams coming out, Lockhart coming out last night, talking in a more dovish footing. They're both voting members, so their conversation or their comments last night were seen quite positively for the risk-on rally. But Bernanke speaking in front of Congress tonight, and he's testifying in front of Congress. The chance of him actually laying down a change in policy is very, very low to me. He very rarely comes out and does anything at congressional hearings. So I think if anyone's actually buying the market today or buying risk assets like gold or anything like that, hoping that Bernanke's going to drop the bombshell tonight, I think they're going to be sadly mistaken. However, I think if we go into the FOMC meeting 1920, that's when we could get some sort of code word from Bernanke. But anyone buying tonight ahead of that will probably, in my mind, be sadly mistaken. But I'm looking at Janet Yellen. She's coming out at 10 o'clock. That to me is going to be quite important as well. And
so just detail why she's important in the scheme of things, because there's any number of kind of Fed members that have come out even in the past, I think overnight, giving their take on this and that. How do you know which ones to actually listen to and which ones to put weight on?
Well, I mean, you've got the big ones. You've got Bernanke. Obviously, he makes the final decision, so that's where it comes from. You've got the voting members and the non-voting members. Lockhart came out last night. He's a voting member. I can't remember which board he represents, but he said, an extension to Operation Twist is very much on the table. Mr. Williams as well last night saying, and he's a voting member as well, saying more needs to be done. Again, these are comments that feed into that. I think gold actually had a nice rally on those comments, but got pulled back because what we saw from the actual beige book. The beige book to me didn't signal that QE3 should be coming anytime soon. The economies are growing at a moderate pace. Janet Yellen is, she's a big hitter on the board. She's the Fed chairwoman, so she does carry a lot of weight. Her thoughts and her stance are very much in league with what Bernanke has. And the way to play this, I mean, we've got 10 members to speaking this week. The way to play the Fed is look at their current stance. Are they dovish? Are they hawkish? We know Mr. Fisher has been coming out with some very interesting hawkish comments. Are they dovish? If they're dovish, then they need to be more dovish. If they're hawkish, then they need to be more dovish. And that's the case, and that feeds into QE3 because you're looking at their current stance and have they changed that, and that's how you trade the Fed going into this.
Yeah, fantastic. Anything else that we need to know about the day ahead or the next couple of days, Chris, just before we leave off?
Well, as I say, I think what we saw last night was more short covering coming through. I still think that you'd be looking for the S&P futures to get up to sort of that sort of 1340, 1350 level. I think we'll probably see another leg down. You know, some of the banks have been talking to us saying, you know, that's where we're seeing the orders coming through. I think everyone's looking very promisingly at the moment as to what's happening in Spain. You know, it does seem, if you look at the front pages of the FT, the Wall Street Journal, everyone's saying coordinated effort is very much there. Everyone's expecting now or hoping that we're going to get some sort of roadmap, some roadmap being announced at the 28th and 29th. The Dow Jones are reporting that the banks can now potentially go to the ESM directly, but the actual the actual risk will be borne on the sovereign level, which is a kind of backdoor route into this. So there's a load more headline risk coming through in terms of what's happening with Spain. But to me, there's nothing concrete that's been announced, and I think you're going to get that sort of melt up into perhaps into the summit at the end of the month. And you know, hopefully we're going to need to see them really deliver with something pretty blockbuster, or this market's going to get, you know, very upset, I think.
So we pin our hopes on another summit. Gee, that's a story we've all heard before. Chris Weston.
Gee being the optimum word. I mean, we've got the Brazilian summit just after the FOMC stuff. You've got the dates now. I mean, you've got the Greek elections coming through. You know, what happens after that could mean that the ECB could come and cut rates. They've left the door open last night after their statement. You've then got the G20 in Mexico. You've got the FOMC on the 19th and 20th, and then you've got the EU summit at the back end of the month. So, you know, there's going to be a lot of headlines flying around. There's going to be a lot of noise. Where there's noise, though, there's trading opportunities, and I like that.
Yeah, summits mean potential for disappointment, though. I think we've learned that one. Thank you very much.
Indeed.
Chris Weston.